Good evening, everyone, and thank you for listening to the Futurati podcast, where we dive into how emerging technologies will impact the world and your bank account. I'm Trent Fowler, and joining me, as always, is my co-host, Thomas Fry. Thomas and I are futurists, keynote speakers, and consultants with decades of experience in analyzing trends and communicating new developments to audiences across the world. Reach out to us at futuratipodcast.com/contact-futurati if you'd like to hire us for consulting, to speak at your event, or to advertise on this podcast. Thomas, we just wrapped up an interview with Josh Moore about his company where they're doing a really interesting twist on Bitcoin mining. What would you say is the biggest takeaway lesson that you got from this episode?
The biggest takeaway on this was the fact that people that were the miners of the past, the people that went out with the pickaxes and dug holes in the ground and tried to discover gold and silver, we've entered a whole new era, and the people that are really smart about doing the mining are the ones that actually don't own their own equipment. The real savvy miners are the ones that are going out there and leveraging other people's equipment and doing it in a way so that they can make a profit without having lots of capital invested in equipment at risk. And I find that to be quite fascinating.
Yeah, he's a classical finance guy. He got into alternative investments, and that's what cued him to looking into Bitcoin. And then he did this really interesting twist on Bitcoin mining. So they do have some of their own capital, they do have some of their own miners, but each of their clients is able to either buy their own machine or just buy into a cash flow arrangement. And they were able to do it with this really interesting lease buyback investment vehicle that lets them get around some of the regulations and cut through some of the red tape that tends to slow down innovation in the crypto industry. So I thought that was really fascinating. And I found just his optimism around the crypto space to be really inspiring. I was really happy to hear that he sees such a bright future and so much potential for this technology to liberate people's innovative energies, in particular with respect to finance.
Yeah, and the other part was that he's not hung up over the price of the token at any moment in time.
That's true.
And that the variables move up and down according to the marketplace. And he's talking about in return on investment of 9 to 20%, which is staggering in this environment.
Oh yeah,
that's a huge return. So if he can live up to that, I want to invest. I think that I got $1.50 in my pocket. I want to put that in there right now.
No kidding. But everybody, you have to know that if you invest as a result of hearing this episode, then you owe us 50% legally. Those are the rules. And
yeah, and we're not giving you financial advice. This is a financial mandate.
Also not financial advice, but you owe us a cut. So with that having been laid, with that groundwork having been laid, we hope you enjoy the episode. Tonight, we're joined by Josh Moore. At the age of 18, Josh was working for a day trader, developing complex analytical spreadsheets used to place millions of dollars in trades each day. At 21, he was a pioneer of the Checkbook IRA industry. By the age of 30, Josh was directly responsible for moving billions of dollars from Wall Street to Main Street. In 2016, he founded the NFN8 Group, believing that the blockchain and cryptocurrency offered a yet-to-be-discovered, once-in-a-lifetime opportunity to pioneer a new financial marketplace. If you enjoyed this interview, please subscribe to the podcast and share it with your friends. And don't forget to check out our website, futuratipodcast.com. Josh, thanks so much for coming on the show.
Yeah, Thomas, thanks for inviting me. Thanks for having me.
Let's hear a little bit about your background, your interests, and what brought you to working on the problems that you're working on today.
Sure. So yeah, as I was kind of going over a little bit, my background is in alternative finance and alternative investments. I guess in a nutshell, I would like to say I'm an entrepreneur. I'm a long-time entrepreneur. Have been for since I was a kid, and recently, what I've been doing, at least for the past 5 years, is essentially raising money and mining cryptocurrencies, primarily Bitcoin.
So what did alternative finance and alternative investments mean before Bitcoin?
I had the same question. What does that mean?
Yeah. You talk to people in the financial markets, and a lot of people are your Wall Street type guys or hedge funds, and they have platforms or investments or portfolios that sort of look like everything else. It's a security. Well, I got in at a very young age. Actually, one of my first jobs was at a company with a day trader who had some alternative, asset exchange strategies, and got into, or started a company with one of those partners where we help people in self-directed IRAs. This was about 20 years ago. And, self-directed IRAs has a pretty general term. It just means you self-direct your own money. Well, we got into it with true Main Street investments, true self-directed, like real estate or, lending, business financing, things that you can't do with your traditional custodians, if you will. And I created a product known as pioneered, not the inventor of, but definitely, one of the first 3 companies who really came out there and made this industry, known as the IRA LLC or Checkbook IRA. And so, I was starting that business at a young age, running that business, taking care of people, helping facilitate that structure, that program, where people essentially are taking their money that they've saved their whole life and put it where they want to. Like, of course, there's rules and there's regulations, but a lot of people don't know there's only 6 of them, really. You can't buy, life insurance, collectibles, and then you can't do 6 self-dealing transactions. So,
what was it about Bitcoin that really caught your attention, that made you did an about face and suddenly decide to go down that path?
Yeah, well, so it's funny actually, because throughout my running that business, that's actually how I ran into cryptocurrencies. I'd heard of Bitcoin, and I initially thought it was what a lot of people did, kind of a new thing. Then when it really started, popping up, I'd say, and well, every 4 years it pops up. I kind of looked at it a little bit, thought, oh, it's a bubble, and a lot of my customers, I guess back up a little bit, because Bitcoin was created in the wake of the 2008 financial collapse, and right. What I was doing immediately after that collapse, 2009, 2010. Was I was helping people get their money from Wall Street to Main Street, and my sort of core, internal beliefs and core customers had that mentality of, if I'm gonna lose my money, I can do that on my own, or right. I'm gonna really take control of my own destiny and manage my own portfolio, my own money that I've saved over the past 20, 30 years. And so that is around the time Bitcoin was coming out, and my business was booming, and I was doing very well as a relatively young entrepreneur and business owner. Fast forward to 2016, I got a lot of customers who wanted to put Bitcoin in their IRA. And, of course, I'd been involved in a lot of alternative investments. I'd partnered with, because all my customers were investors. And so I've done every deal under the sun, real estate deals, real estate financing, business financing, tech plays, and I've done very well in many of those ventures as well. So when initially when my customers were saying, I want to put Bitcoin in my IRA, I'm like, okay, this Bitcoin thing. But I really wanted to look at it from a perspective of how do I support my customer and how do I help them be compliant? They can do whatever they want with their own money. They're not coming to me to manage their money. They're coming to me so that they can manage their own. So my opinion on whether Bitcoin was a good investment, bad investment, I wasn't given it. I wanted to support them, make sure the IRS wasn't going to come after and say, hey, your IRA is no longer an IRA because you bought Bitcoin. So I started looking into it from that perspective and just fell in love with the concept. You know, it was directly related to what I was already doing. It's a disruptive technology. The more that I researched, the more I sort of really wanted to get involved. So I did just that. You know, I took a little bit of money. I got a bunch of GPU rigs. We got me and my family, my brother's an electrician. We, started building GPU rigs, doing a lot of research on the internet, and dealing with the whole electricity issue, because a lot of times you can't really run these things in your house without flipping breakers left and right. And then I decided really quickly, I don't want to be in the data center building business. I don't want to be in the in that business, but I do want to scale this. We raised some money with friends and family, and then of course every attorney that we talked to said you're selling a security if you're raising money in any fashion. If anyone's relying on you guys to make a profit, you want to be compliant. So we did that under Reg D, and we structured a sale leaseback transaction, because I didn't want to give up shares of my company when I was brand new, like so many companies did. And also, frankly, a lot of my customers, the self-directed IRAs, were my first investors, if you will. When I really wanted to go big with this thing, and I went to a lot of them, said and they didn't want to invest in another fund. They didn't want. That's not why they had a self-directed IRA. I knew exactly what they wanted to invest in. They wanted to invest in real assets that had cash flow. So I created a sale leaseback transaction that said, I need these real assets. Today they're called ASICs, application specific integrated circuits, computers that do a specific thing. What is that specific thing? It mines cryptocurrency. When I talk about cryptocurrency, I'm going to talk about Bitcoin, because that's the one everyone knows.
Right.
I got some altcoins in the portfolio, but primarily Bitcoin. That's a $1 trillion market cap. So created this sale leaseback transaction and said, here's how it works. You purchase the computer, and I'll collect from you the price to purchase that computer and the price to run that computer over several years, over a couple of years, because these things do pull a lot of electricity. There's hosting, and then I'm immediately going to lease that computer from you, and I'm going to pay you a lease fee. So I'm not going to hit you up for electricity bills, colo fees, any of that for a number of years. And back then it was 5 years. And every month I'm going to pay you a lease fee. And really I started this by going to some guys saying, hey, you've made some money with me in the past. I got this new idea. I've got a little bit of experience, and you want to take a ride on this? And got some contracts and had a handful of people who did, and we were off to the races. We quickly got into, today I deal with some of the biggest crypto-specific mining data centers in the US and North America. But, I started by really starting, quickly outgrew that garage. We got into a tier 3 data center in Pflugerville, scaled that by selling the sale leaseback, and got into another data center in Dallas. And then I connected with a guy who was running, it was about enough capacity for about 3,000 rigs in Big Spring, Texas, which is, if you've ever been to, you've never been to Big Spring, Texas, because it's nowhere. There's nothing. There's nothing but a crypto facility. So
hence the name Big.
yeah.
Well, everything in Texas, as they say.
Yeah, that's true. We got a lot of so, and then started just saying, hey, these tier threes don't work. Rack space, it's not feasible, unless everything's high. And I need to really start doing business with these data centers who really know how to run cryptocurrency miners, because you don't need a lot of the closed circuits, air cooling. You don't need a lot of bandwidth redundancy. You really just need to run these computers, and so we scaled that operation. We inked a deal in 2019 with a company, Core Scientific, and have a really good relationship with them today. And sort of ever since, really, I mean, it's funny, the journey. And 2017, I always say this story in a nutshell. In 2017, they called me crazy. 2018, they called me an idiot, because we were going through the whole bear market. Everything was going down for a whole year. In 2019, no one said anything. 2020, they said I'm a genius. In 2021, everyone said, well, you're really lucky. So that's my journey in the space.
I have some questions about the structure that you've set up. It sounds sort of like a mining pool, and I wanted to distinguish between what you're doing in a mining pool. But before we get to that, there's a lot of fear, uncertainty, and doubt in the crypto space, and also a lot of fear of missing out in the crypto space. As someone who's thought a lot about the fundamentals and who came out bullish on the other side of that analysis, if you had, let's say, about a minute to address a crypto skeptic and to just make a canned case for the technology, what would you say?
Well, yeah, I mean, the cryptos, it's I believe in Bitcoin, for example, for the fundamental sort of principles and what it aims to do with technology and what it has done. Blockchain technology has spun off in so many different directions. There's so many different applications, and it all started really, I mean, it's been around in this form or another, but really, let's be honest, blockchain technology started with Bitcoin, which was a blockchain technology for our monetary system. And a lot of people who don't believe in it is because they're looking at it from a speculative perspective, and an investment. It's a buy it, it's going to go down, it's a bubble. It's well, and here's how I answer that question. Bitcoin has a finite amount of coins that will ever be produced. That's 21 million coins. And it's a software. It knows it's designed to spit out those coins systematically every 10 minutes, every year. It's designed to fork the circulation, or not fork, to cut in half the supply every 4 years. And naturally, if you have demand that remains the same and a supply that's cut in half, the price is supposed to go up. The value is supposed to go up. And naturally, that's what it's done. Actually, what we've seen is the demand has gone up and the supply has been cut in half. So it really goes up. And of course, you have, as the upward trajectory just surges, you get a lot of people who do have that fear of missing out, and they may buy at the top and keep driving it up and up more than it's naturally supposed to. And then, of course, it falls back down. But, everyone said it was a bubble when it went from 2,500 to, 10,000. So, it was designed to do that. And we're banking on the fact that it's going to do that. And really, honestly, I'm in the mining space. So mining is a lot more, stable, if you will, as someone who's going to deploy my own capital, my own profits back into more efforts. I'm doing it into more mining because that is, although if I buy a Bitcoin miner, I'm long on Bitcoin because it's producing Bitcoin.
Right.
But it's more of a cash flow system than just a speculative, let me buy this and hold this. But you know, I don't know what to say to skeptics, really. I mean, for our program with our company and NFN8 Group, what we designed was a way for people to get involved without getting involved. Bottom line is, I'm a big believer. I'm involved. I'm, all in on this, and I've always done very well. I've always been an entrepreneur. This business has made me a multi-millionaire. So that's real. That's real to me, and that's all I can say. But I did it very wisely. I did it very smart. I didn't go out, buy Lambos, or try and just go crazy when everything was at pushing $70,000. We did very well when that was happening, but I was also unnecessarily scared. But everything was tightening up. Space was tightening up, data centers were tightening up, equipment was getting more expensive, supply chain was pushing out more, the demand was high. And so when everything was going up, that's when I was kind of like, I'm going to sit this one out and, no longer really grow my business the way I have. So, when it falls down, which it has, we're taking advantage of that.
So a recent story came out that South Korea is going to legalize ICOs. There's the Central Bank of South Korea is encouraging that to happen. So these initial coin offerings, they have some good points and some bad points to them. I was just wondering if you've heard what they're doing over there and what your thoughts are on that.
Yeah, I mean, so ICOs, an initial coin offering, is I've seen a lot of little projects, crypto projects that have really good team, really good developers, really good idea, but the noise in that space and all the scams has really getting a lot of attention from regulators and governments, and they're shutting them down. So what I could say is our government, initial coin offering is depending on which kind of program you use, platform you use, technology you use, it's really a way of saying, I'm selling this new coin. Let's say I create Josh coin. What's Josh coin? Oh, you can buy Josh product with it, whatever. But it's going to be the future, and Josh product's it's doing this and we're doing that. And I'm selling a stock in my company without selling a stock in my company. And our government sort of realized that, and they realized it very quickly, because a lot of these stocks didn't take the measures that a real company would take to go public, or take on real investors. So I kind of stay away from ICOs. I do know there are a lot of good ICOs out there, and there's a lot of good new technologies out there that aim to do. I think it's sort of great a few years ago, with real innovators using the technology to really raise money and push new technologies and new systems. But at the same time, anytime you have a lot of easy money, you're going to have a lot of people there to just grab it and go.
My sense is that they're going to add a few regulations to it this time around that's going to prop it up a little bit more. But I found that intriguing that they're wanting to stick their neck out and push the industry out there again.
Yeah. And the thing is, ICOs are legal here in the US. It's just you're selling shares in your company, and or you're our regulators are just saying, and I'm not a huge expert on ICOs, so take this with a grain of salt, but the way I see it is, if you want to go and sell shares in a new company or a new idea to the general public, you're going to get scrutinized, you're going to get regulated, and if you're not compliant, you're going to get shut down. Because we do have a lot of convoluted laws, for better or for worse.
I want to go back to the question I had earlier about how the structure you've set up is different from a mining pool. You just walk me through that a little bit.
Well, so yeah, a mining pool, it's way different. A mining pool is so if I have a one miner, one powerful computer, or I have 1,000 powerful computers. These days, if I try and go out and really get rewarded through my computing efforts, there's a lot of competition, and there's a lot of luck factor, and chances are I'm going to be spending a lot of money on electricity, manpower, running that data center, and I'm not going to get anything, because I'm always getting beat to the punch by the hundreds of thousands of other millions even, of running around the world. So mining pools sort of is what we have today when it comes to Bitcoin, at least. And these are pools where you can participate, you can point your miners in the pool, and it just makes the rewards more reliable. You get block rewards every day. You get Bitcoin production every single day. So you're not out there on your own. You're participating in that pool. And if say there's 10,000 miners on the pool, and I have 1,000 on that pool, well, I'm going to get 1/10 of the production that pool mines that day. So we do that as a company. We run these computers, we get the Bitcoin, and then we do with it what we do, which is a number of things. We hold some of it, we trade some of it, we liquidate some of it to pay the bills, and then ultimately what we've done historically, we've done very well, is we ultimately take profits and buy more miners and repeat. So we do that as a company. Now, what our customers are getting a cash flow system, because a lot of the computers, not all of them, when we started the company, we built our company really off of our customers' computers. But these days, I'd say our customers have like 1/10 of our whole fleet. But that's how we raise money, is by a sale leaseback. So, for example, if you wanted to be a customer of ours, I would say to you, okay, I'm going to give you, you're going to purchase a miner, and you're going to pay me, for managing that miner, and I'm going to lease that miner from you, and I'm going to pay you in cash every month. And today we have different programs, but they're paying between 9 and 21% returns. And we've been doing that very well over the past 5 years. It's a very good return on investment for a passive investor. It allows us to continue scaling. A lot of companies go and say, I want to raise $100 million. I'm going to buy this many miners, and we're going to produce Bitcoin. We're going to hold it. Well, that's great. We don't do that. We keep going, and we have sort of a endless raise, if you will, and we also take our profits, and that's really these days where most of our purchases come from, because we're buying future inventory with manufacturers for our future customers. But really, it's not our investors aren't buying into a mining pool. They're buying into a cash flow system that produces a good return on investment.
Very interesting. And then to what extent does profitability depend upon the price of Bitcoin? Like if it crashed, presumably you wouldn't be in the money anymore, right?
So we were mining when Bitcoin was at $3,500. We were mining when it was pushing $70,000. The way that Bitcoin mining works, there is a difficulty factor. So it becomes the more, I'm going to say hash rate, and if you want me to explain these terms, happy to do so. But a computer produces what we call hash rate, which is processing power. It's a way of measuring processing power.
Hello, this is Trent Fowler, co-host of the Futurati podcast. One of the most common pieces of marketing advice I've come across is to know your audience and give them what they want. One difficulty in podcasting is that it's actually pretty hard to do this. None of the major platforms give us any way to reach out to you, our listeners, to find out what you enjoy about the Futurati podcast and what you'd like to see done differently. So we've decided to record this commercial and ask you directly to reach out to us. Head over to futuratipodcast.com, go to the contact page, and drop us a line. Tell us about your favorite and least favorite episodes, what you'd like to see us cover in the future, and anything else you want us to know. We produce this show for you, and we want your advice so we can make it even better. Thank you. Very interesting. And then to what extent does profitability depend upon the price of Bitcoin? Like if it crashed, presumably you wouldn't be in the money anymore, right?
So we were mining when Bitcoin was at $3,500. We were mining when it was pushing $70,000. The way that Bitcoin mining works, there is a difficulty factor. So it becomes the more, I'm going to say hash rate, and if you want me to explain these terms, happy to do so. But a computer produces what we call hash rate, which is processing power. It's a way of measuring processing power. And the more hash rate is on the whole system, the more difficult it becomes to mine a Bitcoin. And as the price of Bitcoin goes down, what happens is less efficient miners or people who are paying more electricity fees, basically it's not feasible to mine. They're underwater. They can't afford their bills. They're turning their units off. So the difficulty goes down because hash rate goes offline, difficulty goes down. Now it becomes more profitable. And so it's always a balance. It's always a balance. Today, I would say we mine a Bitcoin at like $8,700. So, if Bitcoin drops to $8,700, I think it's going to cost us probably $3,000 to mine Bitcoin. I don't know, because difficulty is going to go down. There's definitely a point, it's risky, if you're not doing it right, you're set up wrong, you're at the wrong co-location, or you're trying to mine in your garage. There's definitely a point where it's not profitable,
So do you switch to other cryptocurrencies when the price changes?
Yeah, I mean, so it's all about it's about the I'll talk about the computers. These computers are application specific integrated circuits. What that means is they do one thing and they do one thing very well, and that's run a specific algorithm. They have microprocessors in these computers that all they do is run one algorithm. Now you take a GPU, for example. A GPU can do a number of things. It's a high-powered processor. You can play video games on it. You can run a computer. You can send an email, with a Bitcoin miner, all you can do is run that algo and mine Bitcoin. Now, there are other cryptocurrencies that mine on that algorithm. So like Bitcoin Cash, BSV, Litecoin Cash. So you can switch. You can switch to mine other cryptocurrencies, and we do that. And we invest in other miners as well that run different algorithms. But like I said earlier, we're focusing right now on the safe play, which is the $1 trillion market, and which is the leader in this whole thing called blockchain technology. that's revolutionized, I think, the globe, and really, aims to. It's a beautiful future that we're going to be looking at. I think it's the internet 2.0, and hell, when the World Wide Web came out, people were poo-pooing it, they were bashing it. You had a lot of businesses who were coming out who didn't know what the hell they were doing with it, creating the ICOs of the world. Everybody was an internet company. Well, yeah, we're seeing that in the crypto space as well. But it's a technology that's a lot more transparent. It can be owned by nobody and everybody. And there's a lot of real good applications that in this system we're participating in. I'm not just, my background is in the financial markets, alternative investments really. But I'm not just someone who said, hey, I want to get in this and make a lot of money. I really do believe in the foundation that Bitcoin is sort of set for the future.
Yeah, let's go ahead.
Yeah,
Thomas.
how much of a scare was it when the Terra Luna event happened that caused the entire crypto markets to start cratering?
Yeah, that was definitely a domino effect. I think that the Terra Luna guys, they got caught. They didn't have enough reserves. They got shorted. They had to sell billions of dollars of Bitcoin, and it just got worse and worse as their selling went down. Had to sell more, and it was a domino effect. A lot of big companies, Celsius, they were over leveraged on their endless lending against Bitcoin program. They had to go sell huge tranches of their Bitcoin holdings when they wanted to hold forever. They wanted to hold until Bitcoin was $1 million, and which is a great concept idea. There's a finite amount. Let's get as many as we can, hold for as long as we can. But a lot of companies had this play to get to over leverage themselves, and they got caught, and it really created a domino effect that sort of, I wouldn't say crashed, but really created a bear market in the cryptocurrency ecosystem. Now, was it a scare? No, not for our company, because our program and our what we're giving our investors is, let's just say the top, let's just say we're paying people 20% returns, right? Well, it doesn't matter if I'm making 40% returns, 60% returns, 80% returns. The way that we mine Bitcoin, it's very easy to make those types of returns. So are we less profitable in that environment versus an environment where, Bitcoin was at $60,000? Sure, daily revenues don't look as good if you're looking at them in terms of US dollars. They look a little better when you look at them in terms of Bitcoin. So changes our holding strategy a little bit. Also what it's done for our company is it's brought the price way down on equipment, and it's opened up a lot of cheap posting space for us. Now, granted, there's a lot of stuff going on in that world as well, but for us and our company, we were able to take advantage because I didn't build a company that says, let's go get over leveraged and go to the moon, or, all or nothing. We kind of built this to, hell, my second year in, it was a year-long bear market. It was brutal.
Right.
So, I've been here before. It wasn't scary.
Are you enjoying this episode of the Futurati podcast? If so, please like it, Give the show a 5-star rating on Apple Podcast, Spotify, or wherever you get your podcasts, and share it with your friends. By far, the best way to help us grow is to spread the word on social media, which will expose our content to more people and help us continue to bring you interviews with world-leading experts in AI, quantum computing, cryptocurrencies, and so much more. Thank you in advance. Well, very good. I'm glad you got diamond hands. I wanted to ask you a little bit about your optimism with respect to the future and what Bitcoin will make possible. So on your website, you have some verbiage on there about how blockchain and cryptocurrencies offer a once in a lifetime opportunity to create a different kind of financial platform, a different kind of financial system. So I'm curious as to what exactly you had in mind with that. Like what's wrong with our current financial systems? How does crypto make it better? Why does that matter?
Well, I mean, our current financial systems, obviously, the dollar has a place to play, but there's a lot of problems with it. There's not a finite amount of dollars. I mean, we've seen after the pandemic, like 40% of all dollars in circulation were just printed. I mean, that's crazy. So you can call that a stable currency, but look at the price of everything else. So the dollar is stable, but the whole world is not. Everything's gotten more expensive. It's more expensive to live. It's more expensive to buy property, put gas in the tank. So you have those sort of those problems just running off the US dollar. And it's a small group of people, really, who own it, control it, and that's the banking system. So that system is not designed to really build or preserve wealth, especially not for ordinary people. Cryptocurrencies like Bitcoin have opened a window, at the very least, to change that game. Just so for those who don't know, Bitcoin is a decentralized platform, and can be a medium of exchange that cannot be impeded if done correctly. I mean, you see things going on like protesters in Canada.
Right.
You can't send them money if you want to support them. A lot of people can transact very easily, as a consumer. But when you talk about moving large quantities of money, it's always, they beat us all the time when we buy miners from China. What are you doing? Are you doing something illegal? Or prove yourself to us? And that's a flawed system in and of itself. The banking system can easily get over leveraged and sell us products that have failed, have crashed every so often, and they get bailed out and we don't. So those are flawed systems. You look at the cryptocurrency ecosystem. It's really, I mean, I'm not saying it doesn't have its own flaws, but just like the internet, it opens up a window to change that system, make it a little more fair, and also allow sort of your everyday people to participate. I mean, that's, what am I? I'm a new age banker. That's all I am. You're trying to move Bitcoin, you can go through the miners.
Right. So
I guess, did that answer your question?
Yeah, no, that was an excellent answer.
So as you got into this business, I mean, you obviously knew a lot about the investment world, and you had the option of investing, you can becoming a currency trader. I mean, it's much rather than mining something, which is a laborious process. You could go buy some currency in Bangladesh, or buy a currency in some third world country, and invariably those currencies are going up and down, and that seems like a much easier way to turn a profit rather than, but you've chosen something that's a very methodical, systematic approach, working with cryptocurrency, which still has only been around 13 years. And so it really hasn't had any long-term stability built into it yet. How do you go about thinking about the next big opportunity that's coming out of the woodwork?
Yeah, I mean, what I fell in love with was the idea that you could take our current monetary system, our current financial system, and you could sort of change it in a way that that's more, I don't know, futuristic, and that's more free and is global, is immutable, is transparent, and has so many other really beautiful properties and applications. Now, versus speculative investing. So I'm not saying buying Bitcoin is not an investment. Okay, a lot of people who buy are planning on it to go up. I mean, that's human nature. We all do it. But trading, you got to get on exchange. It's regulated. It's not immutable. It's not transparent. We say it is.
Okay.
It doesn't have so many of these properties that I love about this new system. And you got to go through an exchange to do that. The house always wins.
Right.
I mean, the early days when we do have a trading platform. We do trade, a lot of cryptocurrencies. We do it sort of as a system, not really as a staring at charts all day and trying to bet which one's gonna go up the most. More of as an arbitrage or a dollar cost averaging strategy. But if you want to if you want to exchange with people all over the place and you want to have real volume where you can do that, yeah, you've got to go on that regulated exchange and take that risk, if you will. But it's like anything else. Do your research on the bank that you're holding your dollars with, right? Do your research on the brokerage firm you're holding your stocks with, and do your research on the exchange that you're holding your cryptocurrency on. And we're on the best ones, the ones we feel are the most solid, at least for U.S. company, U.S. citizens. So the difference is really, it's like night and day.
Okay.
And I've chosen this because right, anyone who sort of looks into Bitcoin is going to immediately see, well, how does it work? Why can't someone take it from me? What makes it immutable? And that is the nodes and the miners and the way that they work together. Because hell, I mean, if you swipe your credit card, that's going to go through algorithms, computers, systems, but that's a central authority that processes those transactions. They can change those transactions. They can take them back. They can add things on, and they kind of transparent, I guess, but not really. So that's why I chose this over the traditional sort of method of making money.
Do you need a dynamic and knowledgeable speaker for an event? Thomas Fry and me, Trent Fowler, are both seasoned keynote speakers, able to converse on a wide array of topics to audiences of all sizes and skill levels. Go to the contact page at futuraudiopodcast.com to book Thomas or myself today, and let us apply our years of experience in public speaking to make your event a smashing success.
So shifting gears a little bit, in the last couple minutes here, you're something of a blockchain expert. What other industries do you see springing up from blockchain in addition to the crypto world?
Well, so when you have something, again, this is all new. I mean, look at Bitcoin. I mean, it's just been given no fair shake in the media for since 2010. Lobbyists, huge conglomerate, banking systems tried to kill it. Everyone's tried to kill it, and create this narrative that it's evil, only hackers and drug dealers use it, and that type of stuff. Well, it survived. So I see a lot of new what I call ideas, programs, or for lack of a better term, the tests that are coming out. And give you an example, like the NFT world. It's NFTs, they have real applications, but nobody really has built, like, if you had a decentralized gaming platform. My kids, they play video games. Rockstar, this is Grand Theft Auto. You can go buy a car on Grand Theft Auto. You can buy a boat. So you're paying Rockstar money. Well, imagine a world where that video game was not owned by Rockstar. It was owned by the developers of this video game, and those developers created, NFTs or they actually developed that world, and they were rewarded for participating in that world. I see the gaming industry really changing, drastically off of this technology. There's systems that companies are using blockchain technology for GPS coordinates. Just tracking, where you don't have a person going, all right, let me check the inventory, let me log it. It's already built into the system. Really saves a lot of time, effort, money, using these new technologies. It's endless. When you take a system, you use blockchain or just distributed information, distributed ledgers, to make it more transparent and make it decentralized, allow everyone to participate. There's endless applications that you could add on top of that, and I see a brighter future. I mean, I don't know how much of an expert I am. I like to align myself with some very smart people and people who've run their world very well. And unfortunately, my sort of education, at least at the point, is sort of limited to the Bitcoin world, and specifically the mining space and how it works, and how to design it so it's profitable, and who to align yourself with to turn that profit. And I think we're out there fighting the good fight just by allowing people to participate in this system that can be very difficult for the layman to understand, and allow them to share in the wealth, grow the wealth, preserve the wealth, and support the backbone of Bitcoin through in a passive way. That's all we're doing, really. Although we do have several verticals and several subsidiaries. So we also host miners, we sell miners. It's not just about working with accredited investors as passive investors. So we allow people to, like, say you want to buy a miner and you don't want to run it in your garage. We have some subsidiaries and companies who do that type of stuff as well. You know, joint ventures, we do some cool stuff with some good people. But it's all sort of geared in this space. And you know, I like to say I'm changing the world just in a little way, you know, and you know, and I see a brighter future because of it. You know, I see a lot of smart developers and a new industry emerging that's got endless applications.
Well, I want to thank you for joining us on the Futurati podcast here. This has been enlightening insight into rather unusual operation. It's certainly different than what most Bitcoin experts are are doing. Quite an unusual approach. So I applaud your efforts and your innovation in making that happen.
Yeah, definitely. Well, glad to, glad you guys invited me on, and it was nice to meet you. Look forward to speaking again.
Absolutely. Appreciate it, Josh.
All right, guys.
All right. Well, thank you.
Well, Thomas, we just wrapped episode 105 with Josh Moore. We spent most of the time talking about Bitcoin mining and crypto. In 54 seconds or so, what would you say is the highlight of this episode?
Yeah, the highlight of this episode is that people that are making a boatload of money off of crypto mining don't invest heavily in video equipment. That's a key takeaway there. But I think this is opening the door for lots of new thinking, in that you can do it with other people's money and you don't have to invest it all yourself. So lots of interesting phone calls, and you can walk away with a bloody fortune just by arranging all the interesting pieces to come together like he has. I think that's an interesting takeaway for me, at least, anyway.
All right. Well, that is the highlight of episode 105 with Josh Moore, according to Thomas Fry, futurist. Don't forget to like the episode, share it with your friends, and subscribe to the podcast, and we will see you next time.